Good afternoon, everyone. Good morning, good afternoon, everyone. Welcome to this webinar from our Jean Monnet Network, Crisis, Equity, Democracy for Europe and Latin America. I'll briefly explain in Portuguese. Bom dia, boa tarde a todos. Nós vamos começar agora a nossa terceira webinar da rede Jean Monnet, Crisis, Equity, Democracy for Europe and Latin America. A conferência vai ser em inglês, mas nós temos a possibilidade de tradução para o português. Vocês precisam apertar o botão Interpretation, interpretação, na parte de baixo do Zoom, se quiserem, então, ouvir em português. A partir de agora, então, eu vou voltar a falar inglês brevemente para apresentar. So, thank you very much. I was just explaining that we have a live translation to English. And this webinar on digital currencies, implications for the international monetary system, will be coordinated by, it's actually a presentation of 4 of our members from our Jean Monnet network, and it will be coordinated by Nicola Bilotta from Instituto Affari Internacional in Rome. And I'll pass the word to him. I welcome very much this possibility for us to discuss this topic, which I understand is very important, and I believe yet not very well debated, at least in Brazil. So thank you very much for all of you to share your knowledge about that, and hopefully we'll be discussing and debating that. We'll have time for Q&A. You can send your questions by the chat or Q&A later. So Nicola Bilotta, I think I give it to you for you to introduce our speakers and our topic. Thank you.
Thank you very much, Andrea. Thank you very much for the presentation. So good afternoon from Rome, and thank you for being with us today. I'm very pleased to welcome you all to this webinar in which we will discuss the implication of digital currency on the international monetary system. So first of all, I would like to thank Andrea and the colleagues from the book who have worked to organize this meeting. And of course, a big thank to my colleagues, Stefan, Christian, and Maria Antonietta who will be presenting today. So I will be chairing this webinar, and before I will just deliver a very short remarks on briefly and broadly what we are talking about today. Digitalization has been changing the way how people use money, globally reducing the share of cash in transaction in favor of cards and e-money solution. The rise of non-cash payments is a global phenomenon, although moving at a different speed around the world. Global non-cash transaction reached 708 billion transactions in 2019, surged by 80% since 2014. The value of global cashless payment grew from $900 trillion in 2014 to 1.3 trillion in 2018. For example, in countries like China and India, the volume of cashless payment increased by 52% and 51% respectively between 2014 and 2018. In this context of growing digitalization of payments, the discussion around the introduction of a retail central bank digital currency, CBDC, around the consolidation of Bitcoins and the eventual development of privately owned stable coins and gain momentum. Before leaving the floor to my colleagues who will tackle specific aspects of this mega trend, we need to make a step back first. There is a bit of confusion sometimes on what digital currency are. Under the umbrella, the broad umbrella of what we are used to call digital currencies, there are comprised completely different initiatives. Their characteristics and their underlying functioning systems directly affect their potential risk and benefits. Digital currency, first of all, is a type of currency that has no physical configuration and only exists in digital form. With the development of new types of digital currency, the concept of e-money or digital currency have been much wider. So first of all, CBDCs are neither Bitcoins nor Libra, formerly known as DM, so Facebook stablecoin project. The Bank for International Settlements suggests identifying a taxonomy grounded in the interaction of 4 basic features, which are accessibility, issuer, form, and technology. The International Monetary Fund, with a paper by Adrian and Mancini Grifoli, have proposed a different framework. So we can identify digital currency or different currencies based on the type. So if it's a claim or an object, followed by the value, if it's fixed or variable, or the technology, if it's a centralized or decentralized settlement, and also by a 4th feature, which is related to the fixed means, which is whether this form of money is privately or publicly backstopped. It's very complicated, but to make it simple, I think we can identify three macro categories of digital currency, which are very different from their characteristics and the benefit and risk that they can produce in the international monetary system. So we have central bank digital currency, stable coins, and cryptocurrency. The first question we need to ask ourselves is if all digital currency can be considered form of money. Money is traditionally defined as a financial asset, which acts as medium of exchange. So when we go and we pay, store of value, meaning that we have, money in the bank, and unit of account. To fulfill these three functions, money needs to have a broad acceptance and needs to guarantee the safeguard of its value. Now, if all digital currency have these three pillars, three-pillar characteristic can be questionable. However, I think that nowadays with the digitalization of payment is a theoretical question. What we need to ask ourselves is if this digital currency can have one or two of these characteristics, because what we are observing right now is an unbundled form of money. So the general public can access different form of money and they can use different form of money for different necessity or different function. Now, when we talk about central bank digital currency, we are normally talking about retail central bank digital currency. So traditional money, but in a digital form, which is accessible for the general public. It is a direct liability of the central bank, in contrast to the commercial bank money, which now we assess when we use like credit cards and bank accounts. This is a liability of the central bank, and it can be assessed by individuals. So now we already have some sort of, let's say, central bank, wholesale central bank digital currency, but is only accessible by corporates and by specific and licensed financial institutions. Of course, a central bank digital currency system can be designed differently, can be token or account based, can be directly distributed by the central bank, meaning that you as a consumer would have a e-wallet directly in the central bank, or can be indirect. So you can access this virtual digital currency through licensed e-wallets and financial institutions. The underlying technology, so we are talking about blockchain, but that is not the only solution. We have seen experiments done by central banks in which they are using decentralized database and other sort of technical solution. Each design choice implies a different degree of risks and benefits. The main point about central bank digital currency, in my point of view, is why now 80% of worldwide central banks are actively researching the potential for CBDC. 60% are experimenting with the technology, and 40% of them are deploying pilot projects. Where, with the digitalization of payment dominated by private players, central banks are trying to assure public access to a legal tender issued by the central bank if cash is phased out. Nobody wants to, let's say, eliminate cash. Cash is going to be there. If you read any white paper about CBDC issued by central banks, they're all talking about having an additional tool for consumers. So nobody wants to completely cancel cash. It's going to be a complementary tool that we can assess. And CBDCs can also improve the efficiency of the payment industry. The second big macro category of digital currency are cryptocurrency, like bitcoins, which are not issued or backed by any government. Its value is determined by different factors, but the most important is its demand for it. So when people buy Bitcoin, its value increases. Conversely, when people sell Bitcoins, it decreases. For this reason, its value tends to fluctuate a great deal. Nowadays, the market capitalization of the, let's say, hundreds of cryptocurrency in the market has exceeded $2.5 trillion. And we've seen many interesting operations like El Salvador, who has recently adopted Bitcoin as a legal tender in the effort to reduce its dependency from the US dollar. But there are also several incumbent banks or private companies who are investing in crypto. The third macro group is stable coins. Like I'm always quoting Facebook project called Libra that now is called Diem, because it was one of the most well-known project of stable coins, but already in the market there are hundreds of stable coins. the characteristic of a stable coin is that its value is anchored to a basket of assets, which can be a national currency, can be gold, can be real estate. There are many different weird animals in the market there. And its value then depends on the value of those assets. Therefore, is not that normally guarantees a more stable form of money. I think here in this macro category, we need to be very careful to stable coins who are issued by private providers, not only DM. There are several projects by large corporations who are thinking about launching a stable coin. I always mention the case of Walmart in the US, who in 2019 presented a patent for a stable coin, which we can call now Walmart coins or whatever, that was anchored to the US dollar. The idea of Walmart was we pay millions in transaction fees every year, because anytime somebody goes to a Walmart shop, the merchant needs to pay the bank or the credit bank provider a fees. So if consumers use this stable coin issued by Walmart, they could overcome the transaction fees and save millions. And if you read the white paper, it's very interesting because they also explain why for the ecosystem of Walmart, issuing a stable coin could also improve the business model. Very interesting case. So I'm saying that stablecoin issued by private providers are very interesting because their initiative could benefit from two key factors that highly affect money circulation. First of all is the credibility of the issuer. Consumers need to trust that they can convert their digital tokens into fiat money anytime they like, and that the value of the currency is indeed stable and backed by reserves. Because we know that there were many scandals in the stablecoins market where issuer of stablecoins actually didn't have any reserves. Second, the degree of acceptance. So users could be incentivized to adopt a digital currency that is backed by a corporation that has a pre-existing relationship with a large customer base and has high brand recognition, so that it could mitigate the perceived risk related to its governance, and at the same time, it could empower an ecosystem of services and products. So this characteristic could allow both diffusion information and adoption, reducing the common entry barriers to new form of currency. So each of these three forms of digital currency carry specific risks and opportunity for the international monetary system. And I'm very glad that my colleagues are gonna tackle different aspects of this big phenomenon. I just wanna do a bit of self-promotion. So if you like to dig a bit deeper this topic, I've recently edited a volume on CBDCs titled "The Near Future of CBDC: Risk and Opportunities for the Global Economy and Society," which is in open access, available online. And we analyzed the phenomenon of CBDC from different perspectives. We have focused our attention on geographical cases like the digital one. We have focused on the euro, but also on specific aspect of CBDC. So the contribution of international experts. I've also wrote a paper which has the ambition to explain the main implication of CBDC with a simple language for not expert, that is titled "CBDC per Dummies: Everything You Need to Know About CBDC and Why You Should Not Be Afraid." And finally, a very short op-ed on the internationalization of a digital one, which is titled "An International Digital One: Vain Ambition, Excessive Alarmism, and Pragmatic Expectation." So without stealing more time to my colleagues, I'm very glad to leave the floor and the stage to Christian, who is gonna present on digital currency and the international effects on the international monetary system. Christian, the floor is yours. I know you have a presentation, so.
Yeah, thank you, Nicola. Let me charge. Okay, so I will speak about CBDC, of course, but starting from the global picture in continuation of what Nicola already presented. I cannot move. Okay. So first of all, but very quickly, because Nicola already presented the main animals of this zoo, which is a strange jungle. Then we'll see that we are really facing a tsunami at a very high velocity. Amazing. I have some figures, to the point that we could use the analogy of Louis XVI when the French Revolution started, and he asked what it was about. So we could make the same question about digital currency or digital or crypto assets. It is really a revolution on which has a lot of change, not just for monetary policy, but for the whole society. So we'll have a look to the main structural change inside financial market, which have prepared this big change, because this is not so new with the overdevelopment of the shadow bank system, making that central bank power is decreasing, especially with now the potential of crypto assets. Then we'll see that this is a chance for a central bank to make the jump they have not yet been able to do for building a more stable and more reliable international monetary system. So here you have the financial spaces. In this classified from the IMF staff, you could see that CBDC presently they are just a single experiment in the Bahamas. It is the only CBDC working at this moment. Of course, almost all the central bankers are presently working very hard to test or to make pilot projects. The big one is, of course, China, where the experiment is already working, but not generalized, and others are coming in this pipeline. The rest, the privately issued crypto assets, some are working or have been working for a very long time, like, for example, any credit card is in reality now an e-money. And more concretely, in Africa, for example, in Kenya, the majority of payments are already made with smartphone, as it is also the case in China with Alipay or other system which cover almost 95% of the retail payment in China are made with smartphone. Stable coins is a new kind of animals which is booming at this moment for very precise reasons. So other definition, I have no time to pass it, but it's important to mention the DLT, which is a technology behind blockchain and the technology which is the basis of the revolution. And also the decentralized financial platforms, the DeFi, are now using especially some kind of crypto assets for making a lot of additional development on the non-bank markets, on the shadow bank markets. So here you have a first picture which gives a visual impression of the tsunami. In a very short term, in less than 1 year, the amount in crypto assets was triplicated. And then with a big fall in May, which they recover after that. But to give you an idea, we are around between $2 trillion and through 3.5 trillion. This makes more than 10% of the world monetary stock. So this is really a tough change. So, for example, to give you an idea, the monetary base at the world level is around $20 trillion. So currently, crypto assets are more than 10% of the monetary base in the world, but they are out of any control from central bankers. And in this booming market, the stable coin, you could see, is even faster, because they started from almost nothing a couple of years ago, and now are already very significant, to the point that in fact, you see the yellow curve, stable coins are supporting most of the trading volumes of exchange because they are used on other markets for making other contracts. The specificity of stable coins is to be usable for supporting other financial operations. So it's a multiplicative power. And precisely, DeFi, so the decentralized financial new markets, are also booming. You could see in 1 year, they are blocking a lot of collaterals expressed in these crypto assets. Now, this is a very specific index which reveals the intensity of the demand for crypto, not in volume, not in dollar, but relative. It's a very complex index which is made up by a private company, but very revealing of the intensity of the demand, because it is the ponderation, the weight, are in function of the median income level of each country. So you could see that amazingly, for example, Venezuela or Argentina are very high in the demand for crypto, but for specific reasons. India, it's also in the same position, or Kenya is very high too, higher than in Europe, for example, or in Canada or Mexico. Other significant idea of this tsunami is this other index for the demand for crypto. You could see that in less than 1 year, you have a multiplication by 20. Now, for the DeFi specific markets, this is a little bit different. Between it's almost a big technological firms who are leading in China, in the US, in England, and a little bit in Russia. Now, what kind of change does it imply? So, on the conceptual aspect, crypto assets are in fact the opening of money to non-regulated shadow banks in competition, which undermine the monetary monopoly of the monetary authorities. So it's a big society revolution with a lot of possibility of deviation towards anarchical freedom of pure markets, up to a more totalitarian regime. For example, it's not a secret to mention that China is very advanced in cryptocurrencies for political reasons, to control totally the population, and not just for efficiency of the payment of the cities. This is also that, but so you have an opening of the range of possible situations with a lot of threat for democracy. Because, as I mentioned with the index on the previous slides, you have a very huge demand. Billions of poor citizens could have access to easy, efficient payments. So there is a demand. But these crypto assets up to now are in the hands of big oligopolistic companies. That means that there is a risk of rent seeking and rent capture by some companies for private reason. They could also organize the exploitation with the big data, and they could sell this for social control, even for commercial interest or for political deviation. So it's really a threat for the citizen and for our democratic institution. And second consequences, it is an additional source of global liquidity instability. I would say unsustainability, according to my view. So there is an urgency to adopt some measures, and we need that our central bankers have to very quickly to jump in order to take control of that. So the only solution is CBDC. But CBDC with strong harmonization and regulation, not just for monetary policy purpose, but also for protection of individual freedom and privacy. And this is only possible with a very, very strong coordination among central bankers at the multilateral level, which is not yet the case. So now CBDC, the definition is that CBDC is an official money, contrary to the rest of the crypto assets. And it's just the translation of cash into a digital form, like banknotes or bank reserve with the central bank. So it's an extension of the digitalization of the rest of the monetary base. I already mentioned that this is not totally new, because the banks are already using digitalized systems, not yet blockchain based, but they are using digital systems. But now with CBDC, the citizen would have access with a new technology, which is really transforming the genetic aspect of money in the following sense. These central banks' money would allow instantaneously to eradicate the segmentation between banks and citizens. With CBDC, you don't need anymore a banker. You could skip all the intermediary. This is really a revolution with a lot of consequences, not necessarily positive. And overall, this is an eradication of the concept of monetary residence, in the sense that you could make an international payment as easy as a local payment in your own monetary national system. And this is also a big revolution, not just because the cost would be cut to almost nothing, and presently the cost of international payment remains very, very high, contrary to local national payments, because all the necessity of controls and back office in all the intermediaries are very costly. With the new technology, the DLT technology and tokenization, you could skip all these costs and all these intermediaries. All the back office could disappear from one day to another. So this is hundreds of thousand jobs, which would become useless. So this also has to be organized seriously and regulated. But I insist, you have to realize that with the ability to make P2P payment, peer-to-peer payment, with DLT transfer, without absolutely no intermediary, no control, no delays, no frontier, no cost, no risk for the settlement, no liquidity risk, no debtor risk, immediately you make in less than 1,000 of a second, you make the payments. This is really a tsunami, potentially. On the present Forex, you don't have the same kind of thing. You could say to me, oh, but I could make now payment on Forex very fast and very cheap. No, because you remain with a risk, which is the fact that you only have a claim on a correspondent, which is not a central bank, which is a bank or a non-bank. It's even worse. Now, with CBDC, you have a claim on the safest liquid asset, which is a liability of a central bank, and not necessarily your own central. This is the revolutionary aspect. And I am not sure that this presently, I don't see so many people who realize this big change. Now, there are a lot of papers discussing and debating another very important consequences, and I want to elaborate presently on this, is a disintermediation. It's the fact that by absorbing and be competing with banks, you will see a big decrease in the demand deposits, so in the deposit of currency with banks. This creates a problem for the banks because they need to develop other liabilities. So they will be pushed to borrow on the shadow bank market, the wholesale liquidity markets, which is with high risk and which is almost unregulated. So another task for the central banker and other monetary authorities. So now, what are precisely what CBDC or and generally speaking crypto asset have brought about as change? In fact, it's an acceleration of something which is already in the pipeline for at least 2 decades. Is the fact that we are facing a big shortage of dollar safe assets. This is the key critical point. Our monetary system is unsustainable because we don't have enough safe assets in dollar. Let me explain this. First of all, we observe for at least 25 years, we have been observing a shift in the funding source from bank deposit to non-bank wholesale markets. But from a majority of banking source from their deposit, which are stable and so on, we are now the majority of the banking world system, which is based on very fragile wholesale markets. This explains the huge expansion of the shadow banks, much more fast than the GDP growth. This kind of markets, due to the fact that there is no guarantee and more risk, and it is at shorter term, they need intensively the use of collaterals, the so-called repo markets.
Christian,
And
sorry.
monetary policy is, by the way, essentially made now on the repo market. So there is a problem of velocity of development of the demand for collaterals and safe asset collaterals, especially in dollar. The supply is not sufficient with respect to the demand for this collateral due to the structural long-term shift in the structure of the funding. On top of that, another reason for this shortage is the fact that these financial markets are now dominated by the refinancing. They have to roll over the very huge debt stock that the whole world has accumulated. So it's about more than 50 trillions of dollars of new money that you need each year, and most of them in dollar, 60% in dollar. So you could, by this figure, you could visualize the so-called Triffin dilemma. The fact that the US economy, which is in relative weight, which is decreasing at very high speed due to the high speed of the emerging economies. So in spite of making a lot of deficit spending, the US economy is unable to provide enough safe assets to the world. This is exactly what Bob Triffin announced since the 50s. For more than 70 years, this was already logically explained, and absolutely no central banker pay attention to that. And as you know, I worked with Triffin a long time ago, and I continue to insist that this is really the key point in the unsustainability of our global economic system.
Thank you, Christian.
So,
if you could conclude briefly, thank you.
This is the main thesis. The present. Sorry, could you repeat?
Yeah, if you could conclude, please, your remarks. Thank you.
Yeah. So I just show you. I conclude with some explanation. This is the huge expansion of global liquidity in percentage of GDP. This is the expansion of the so-called shadow markets, the wholesale financial market. This is the split of the global liquidity on a very short period, since 2005, between, you see, Euro, China, Japan, US, and rest of the world. And you could see the huge expansion of the Chinese weight in this, but the Chinese are using the dollar, and as for 60% the rest of the world too, a little bit less in the euro area. So you could see the impossibility for the US dollar to be produced at an equivalent rhythm. So global liquidity in trillions. Central bankers are losing control. Their monopoly is at stake. Private right and democracy is at stake too. So we need a reaction. So here it's a picture I have no time to explain, but this is the key explanation of the systemic instability in global liquidity, because the basis in dollar is too narrow and it's narrowing in relative terms. So the wholesale market, the shadow banks, you could see the triangle in red at the basis. It's the fragile basis which with a multiplier effect make that global liquidity is so unstable and is a threat for the world prosperity and the peace. While a solution does exist, I have no time to explain it today, but this is our proposal. So to create a multilateral currency, so the SDR, but not the present basket, but a genuine currency. And in that case, although global liquidity would remain with some degree of instability due to the so-called Minsky moment, basically we could eradicate the risk of the wholesale markets, the risk of the internal fabrication of collaterals by the shadow banks would be basically under control. So we can have a solution. We have this solution, and CBDC are presently the way to jump due to this big technology, which would allow to fabricate without any cost a new SDR, an ESDR, no cost to bundle, to compose the basket, contrary to the present system, where making a private SDR is costly because the market is underdeveloped. But if we use the DLT tokenization, it's instantaneous, costless, and this could be the basis for making central bankers to jump and to decide to authorize IMF to issue ESDR, and so we'll have a multilateral lender of last resort with the possibility to manage the basis of the global liquidity in a counter-cyclical way. Thank you for your attention. Sorry for being long. You will have the detail in my presentation.
Thank you very much, Christian. I'm sorry if I interrupt you, but time is always running behind us. Very interesting presentation. I think there is much to discuss there. And on the multilateral effort that is required in regulate digital currency, which by nature are transnational and cross borders, I'm going to leave the floor to Maria Antonietta. I just want to flag that a few days ago, the G7 under the UK presidency issued a report on principle that central bank digital currencies in, let's say, Western or democracies should follow. Just because I would like to remember to the audience that the Chinese with the digital one are the most advanced, the country with the most advanced CBDC experiment and project in place if we ignore the small Caribbean countries. And they are trying to, let's say, foster a multilateral effort in trying to develop some global standards, how CBDC should be designed or regulated. And they are part of one of the most important cross-border experiment, which is a coordinated project with the Bank of Thailand, the Bank of the Emirates, and the Bank for International Settlement. So the Chinese are very active in trying to shape the digital space, and that is something we need to take into account. Maria Antonietta, the floor is yours, and thank you for your presentation.
Thank you very much, Nicola. Thank you, Christian, for your presentation as well. I'm very glad to be here today. I'm not an expert on digital currencies yet, I guess, because there's no way to run from there. and the subject will be imposed to us and to us as scholars and also as citizens. So we're gonna live with that. First, I want to focus on very specific points, and I want to be very brief in order to leave time for Q&A. The first thing I want to focus on and I want to draw your attention on is the role of central banks in general. And in this, and considering both the private digital currencies and the cryptocurrencies that Nicola and Christian already explained, and their own national digital currencies, the central bank, CDBC, which is already turned into a name. So the first question is, to what extent can or could the central banks control markets with the participation of private digital currencies? And it comes to, apart from or beyond the control of functioning markets, so the law that should be developed related to digital currencies, it's important also to point to the privacy, the privacy problems that could arise with the use of digital currency. Why is that? So can you imagine you start using Facebook currency like Diem, and when you start using that, so Facebook will be aware of every single coin you spend, where to, how, etc. So this is one aspect. The other aspect is, even considering that if it was a world with in which private currencies, digital currencies were forbidden, even in that case, central banks would have a very strong power over the citizens. And so even inside the government bodies and within the government bodies, central banks would have a very, very hard power, strong power to regulate and to have information about people. So this is one point. The other aspect related to that were already mentioned, that I'm just briefly considering here, is the transaction costs. When we read reports of the Financial Stability Board, the G7, as I am just here in my hands with the report Nicola just mentioned, and FSB just released a roadmap for the digital currencies 1 week ago, October 13. So if we take a look at that, one of the main arguments for introducing digital currencies is that it diminishes, it decreases enormously the cost of the transaction costs, and it increases, of course, efficiency and everything that was already mentioned. So together with that, we have to look at, central banks have another important issue, which is to decide which technology to use. And this is also, it also involves political aspects, because of course, because of the implications of using one technology or the other one. Christian also mentioned that. And another point that was already mentioned, but I want to underline here is the risk of financial disintermediation, because if we start to have our our own wallets at the central banks, for instance, or in a private company, we wouldn't need banks anymore. And so it makes the possibility of banks creating money very narrow. It narrows actually the supply of credit. If we go to the end of this possibility. So we have no way out. We have to face digital currencies. They are there. They are going to stay there. And what we see for the international organizations and central banks initiatives is that the only way to answer to that is to improve and to create and to enhance and boost CBDCs, central bank digital currencies. So we still have the state behind. We still have somehow a currency that is issued by an institution and is backed by assets. Of course, DM, the Facebook currency, is also backed by assets, by currencies actually, but it's central bank digital currencies come as like a safer answer to this technological and economic developments. So this is the first point. But the second issue I want to raise, it's a general one too, and I'm not going to take long on that. But first, going beyond those aspects, we need to answer some issues about the international monetary system. First, what we see now, it's kind of a race among central banks and among institutions to create, or at least to design forms to deal with digital currencies. So if we read Christian's paper at the Triffin Foundation, we see the details of the European initiative, which deals with also with the reality of having a single currency among countries, which makes things much easier and much simple. And I would say, why not inside the Eurozone? It seems like a natural development to me, but this is one very specific and just one situation in the whole world. But we see, as also Nicola mentioned, initiatives among central banks, Malaysia, Thailand, South Africa, and we just had a comment on our chat about private initiatives in South Africa, etc. So it's a race. We don't know so far what the Federal Reserve is thinking about it, or what they are really, really organizing to the US to deal with the new situation and to face a possible not hegemonic situation of the dollar, which in my opinion is very far away yet. And so this is one point. The initiatives, among the national initiatives, as Nicola just said, I think it's we need to look at China one, which is the first one and which has advantages to be the first one because of the experience. Everyone is going to look at it because of also the technological solutions they are going to find, which will be possibly followed by the other countries. But anyway, it would be absolutely, everyone would have to adapt of China issuing its currency. I forgot now the name, ECDP, if I'm not mistaken, payments and I don't know what. And so this is something I guess it's important to, but a third point within the reorganization or reshaping of international monetary system is that for China, we have been like for 20 years discussing the internationalization of China's currency and the different ways the country is taking to do that, which are not repeating, not trying to remake what has been done in other international currencies, because China is opening a very wide horizon of possibilities to deal and to make transactions with the renminbi. For instance, offshore markets, direct trades, operations, swap arrangements, lots of swap operations everywhere with the whole world. So there are many different ways that China uses to deal with our very well-known macroeconomic trilemma, and for not to lose its autonomy on monetary policy. And so for that, I think for the international monetary system, China's initiative on digital currency is the most important phenomenon, is the most important fact. Again, another way, another initiative on that is the regional initiatives. I just mentioned Europe because it's a special case, but we could see also like in Latin America and or even in Asia, some other regional initiatives. And that would be an answer, or that could be come together to what we have been asking for ages in all financial crises, which is international cooperation. Would that be regional cooperation or even global, or at least a group of countries cooperation? So in this case, this digital currencies and these technological advancements could absolutely increase and make possible cooperation among countries. But if it is a practical possibility, I wouldn't say it is a political alternative for the countries now. We have in Latin America that Andrea and myself have started working and looking at it, but we're going to go further now of the possibilities, existing possibilities in Latin America, but the way they were not used during the crisis we have seen in the 2008, which was the start point for digital currencies, and even before in Latin America. Brazil is out a lot of those initiatives. And so it seems to me that all these aspects go to the wider of them, which is the wide question that we have been trying to answer since the 70s, since the end of the Bretton Woods systems, which is the de-dollarization, which is the divide or at least reshare or distribution of monetary power. And so by that, I just finished my remarks for now. Thanks a lot, Nicola, and all for hearing and listening.
Thank you very much for your remarks. Quite I really appreciated the reference to the political decision behind central bank digital currency. I think is a key issue. Sometimes we forget that we have many different technical solutions, but many of the issues are political. For example, privacy. You know, there are many different designs you can implement in a CBDC system in which you can decide which degree of privacy or anonymity you want to implement in the system. But the decision is political. How much privacy or anonymity you want to guarantee in the system. So going to Stefan with his remarks, he's gonna present briefly about Bitcoins and how they create value, or maybe not. Stefan.
Okay, thank you, Nicola, and hello to everybody from Vienna. I will speak only about one very specific digital asset, no money, no currency, the Bitcoin. And I will try to put the emergence of Bitcoins in the context of what I call finance capitalism. As you know, I operate with the distinction between real capitalism and finance capitalism. In real capitalism, striving for profits is focused on producing real values. In finance capitalism, striving for profits is focused on exploiting differences in the valuation of already existing assets. So if you look at speculation with real estate or with commodities or stocks or bonds, you see what I mean. And in such a system, the Bitcoin is, one could say, an optimal vehicle for speculation. Now I will move hopefully to my presentation. Yes, so the overall title would be Bitcoins as the most striking expression of the essence of finance capitalism. And just looking at the chart, at the development of Bitcoin prices over the past 5 years, we clearly see a very markable instability. We have phases of very strong rising prices already in 2018, up to $20,000 for one Bitcoin, then falling back, rising back, falling, and then this spectacular rise over since the last year, since the end of 2020. And if we look at something like a long-term trend, there is, of course, a tendency of a rising value of the Bitcoin. And how could this be interpreted within the context of overall economic development? Only some remarks on the properties of Bitcoins. The concept was presented, namely software, by a certain Satoshi Nakamoto, which is a pseudonym. We don't know if it is one person or a group. And the so-called Genesis block was created in early 29 when 20 Bitcoins were mined. And you see this expression, Genesis block, hints already to some kind of religious, almost religious attitude by Bitcoin fans. It is a decentralized digital asset. Transactions are verified through cryptography, and they are documented in a chain of data blocks. So you can always go back to the original Genesis block. And this is the big innovation, that the technology of blockchains, which was already invented before, was applied to Bitcoins. The second extremely important property is that the overall amount is limited to roughly 21 million Bitcoins. As a consequence, over the first 2 years, for example, the price of one Bitcoin was less than $1 because there were so many Bitcoins, there was some kind of oversupply. But clearly, the more Bitcoins are produced or mined, the smaller becomes the additional potential supply. At the present, already almost 19 million Bitcoins are produced. And the mining costs rise with the scarcity of the Bitcoins. These costs are not only costs in terms of computational work, but of course also in terms of the related power consumption, but also the waste of hardware. I came across only yesterday an article, I didn't know that the hardware to mine Bitcoins becomes useless after 1.5, at the latest after 2 years, because you cannot use this computer hardware for other purposes, so they end up in Ghana or in some other countries in Africa. The phenomenon that mining costs necessarily rise, of course, drive prices up over the medium and long run. Most speculation with Bitcoins is done in derivatives markets, where we have futures or options based on the price of Bitcoins, or eventually also exchange traded funds. For example, the recent rise of Bitcoin prices was due to a rumor that American authorities would accept ETFs on Bitcoins. Clearly, Bitcoin has no intrinsic value, which means that the fundamental equilibrium value cannot exist by construction. To show the importance of that, I would use the old classification of Adam Smith when he differentiates between value in use. The value in use of Bitcoins is 0. The value in exchange is potentially extremely high. This is exactly the opposite what Adam Smith mentions for goods which are indispensable for our survival, like air, where the price is 0 and the value in use is almost indefinite. Prices are therefore driven purely by expectation about future price movement. So this is some kind of circular expectations formation. But of course, there is a fundamental bias in favor of long-term rising Bitcoin prices due to the limited supply. The lack of any intrinsic value means that there is no center of gravity or attractor, which means that theoretically prices can go anywhere. One Bitcoin could cost $1 million, as long as people believe in that. But of course, it is also possible that the price crashes to 0. All depends on the beliefs of all people who participate in the game. For the reason of its instability, it is clear that Bitcoin is a perfect speculative asset, but it has no function as money or currency. But there are, of course, exceptions. In some cases, Bitcoins serve as substitute for money, for example, in cybercrime, or in countries like Nigeria or Venezuela, where there is no functioning monetary system. Another aspect which is very often not discussed in detail is that the price of Bitcoins is always expressed in terms of fiat money, namely dollars. And it seems that this is a prerequisite for its existence. But at the same time, the Bitcoin fans argue that Bitcoin could become the future money. Therefore, it is interesting to think about a world where there would be no fiat money, but just a Bitcoin. I got this idea only some hours ago, so I haven't thought it through, so to speak. It is therefore an ideal vehicle for speculation, not only over the very short run, but also over the medium and long run. And since expectations are tremendously important, people, I would call them economic gurus, like Elon Musk, can heavily and very profitable influence expectations and price movements through certain remarks. For example, over last year's, the first remark, I think it was in January, when Elon Musk said he had bought 1.5 billion Bitcoins, drove the price tremendously up. Then he said he would accept Bitcoins in his companies as means of payments, again, driving up. Then he made the remark that no, the power consumption is too high, it's not good for the environment. Bitcoin were again falling. At the moment, the market capitalization, so the overall value of all Bitcoins is roughly $1.1 trillion. So this is roughly the GDP of Spain. And this shows that the creation of Bitcoins produced virtual wealth out of nothing. But for the individual, it is, of course, wealth. If you own today 1 Bitcoin, you own $60,000. But from a systemic point of view, of course, there is no value in use whatsoever. So we see some kind of fundamental contradiction between individual and collective or social rationality. The fact that you can exchange Bitcoin for fiat money, for dollars, for example, means that you, of course, you have also created out of nothing the right to get part of goods and services, of GDP. So taking all these properties together, I would call Bitcoins as the incarnation of finance capitalism in the digital age. And I finish my presentation by looking at other developments in recent times. For example, the bull markets and bear markets for stocks. What is, to my mind, signaling maybe even a systemic change is this development. After a very, very long bull market, by the end of February of last year, there began the biggest stock price crash. Within 3 weeks, stock prices lost almost 40%. This is not shown here because those are only monthly data. And then the greatest intervention of central banks ever took place. And they turned a bull market because everybody at that time, in those weeks, I remember very well, were expecting a continuation into a normal bear market. Why? Because we had already such a big bull market, and we had now the outbreak of the corona virus, or the disease, the epidemic. And by intervening so strongly, they turned again the development in a tremendous bull market. You can see it more clearly on the basis of daily data. Here you see the tremendous fall in stock prices, and then the very strange revival afterwards. What does this mean? It could mean something like central bank finance capitalism, namely that, completely different to the past, where central banks let bear markets go their way, so to speak, the so-called correction in asset markets. they aborted this bear market for good reasons. I can understand that, because if stock prices would have fallen exactly at that time when the coronavirus crisis threw the world economy deeper and deeper in the crisis, of course, it would have been catastrophic. But on the other hand, what is the signal to speculators for the future? If bear markets always would be sooner or later aborted by central banks, then we get a very bizarre development of asset prices, maybe similar, almost similar to the prices of Bitcoins. And two last slides, commodities prices. Here we see exactly the same bullishness, which started a little bit later than the bullishness in the stock market, causing oil prices, but practically all commodities prices to rise. Of course, like always, there are also fundamental reasons for that, but speculation, to my mind, plays the most important role. And also, for example, the price of carbon emissions, which are also traded with speculators, got up very strongly. So this is all embedded in a very strange bullishness world, I would say. And I'm very curious how it will go on. Thank you very much.
Thank you very much, Stefan. Very interesting perspective. I also have a question for you, but I'm going to ask it later. In terms of unbundling of function of a digital currency. So I'm going to go back to you, but starting from the beginning. So Christian, I think we got an answer. So please, a question, please, all of you, if you have any question, just type in them in the Q&A or on the chat, and we're going to try to answer them. So Christian.
Sorry, Nicole, I think there
yes.
is one question in the Q&A.
Yeah, I saw it.
And,
yeah, I saw it.
Okay, good.
Yeah, I saw it. There is one on Bitcoin in the chat and one in the Q&A section. Okay. So I'm gonna ask the one on the Q&A question to Christian. So if there is an implicit intention to tackle Bitcoin relevance by the issuance of a CBDC. So if a central bank digital currency is a sort of a reaction towards the consolidation of Bitcoins, and in case if is let's say a way for central banks to take space in a digital world. Christian? You're mute. If you can unmute your microphone. No, Christian, you're mute. You need to unmute your microphone, otherwise we can't hear you. No. Okay, got it now. Sorry.
Okay.
Yes, Christian, you can go. Sorry.
Sorry for that. So I didn't catch very well the question. Could you repeat? Because my connection internet is so bad that when you speak, there are some interruptions. So.
Okay, so very briefly, if the CBDC concept is a reaction to counteract against Bitcoins or privately owned stablecoins. So if states are looking to implement and develop CBDC to regain centrality in the digital space.
No, well, I don't see CBDC is more broadly a reaction against the loss of control of the shadow banks markets. Inside the shadow banks, crypto assets represent a booming segment, which is very dangerous because it is even more unstable than the rest of the wholesale market. So my first point is that central banks have the responsibility of financial stability. For this reason, they have to intervene, and it's very difficult to control shadow banks. They increase the control on the banks after the global financial crisis of 2008, And one of the perverse effects of that, it was to develop even more the shadow banks, because the regulation with the leverage control and the liquidity coefficient paralyze a little bit the bank activities. So these activities were displaced on the shadow banks. That's the first element. The second element is that Bitcoins could exist as Stefan already explained. This is a peculiar assets for pure speculation, creating absolutely nothing, but wasting a lot of CO2 and things like that. It's a stupid invention, but this is not the role of central banks to intervene into that. This should be prohibited for environmental reasons, not for monetary reasons. My preoccupation is that Bitcoins with other crypto assets represent more than 50% of the US monetary base in dollar. So this is a preoccupation for the stability of the world. And this has to be controlled. The best way to control that is to answer to the demand by the citizen for efficient means of payment, especially for poor people. I just give you an example. Recently, an African worker in Europe, which has to send small amount of money. Yeah?
Sorry, no, because we have only a few minutes. I would like also to give the stage to Maria Antonietta, to Stefan, and we need to close at 4:30. So no, I'm very sorry.
Just to finish my sentence, a small amount of money costs between 5 and 10% to an African worker sending money in Africa. With CBDC, it's 0.
Yeah, that was actually my question for Maria Antonietta, and I asked you to give like a 2-3 minutes answer, so that after we can leave the floor to Stefan as well, and then we can close the webinar. So very briefly, my question was, so where had the current international monetary system has failed? And Christian has already answered that one is the remittance market, which is creating incredible rents for the banking system. And then I pass to my second question, which is if you see any risk of substitution of national currency in case CBDCs are issued, and if this could be a risk for emerging economies as long as national central banks allow foreign residents to hold CBDC coins.
Thank you, Nicola. I think your question is very interesting, but I am still an old-fashioned lady which believes in national currencies and which praises the state backing national currencies. I don't see in a short future this possibility, but anyhow, I think that for smaller countries, and this morning I was trying to read a bit about El Salvador experience now, and I think in that case that could be a problem, but what I think is interesting is that digital currencies just make, and like a broad use of them, just make the financial integration absolutely complete. And I think this can be a source of volatility, of course, vulnerability. This could be like an open door for financial crisis as well. That's why the importance of regulation. I know we have just 2 minutes, and Stefan, but just let me say something that Andrea was thinking. What we have in Brazil, and especially in your paper, Nicola, you have one map in which Brazil is considered to have a digital currency. And that's because we have this transfer money mechanism since last year, which is very interesting, but it's not a digital currency yet, but is a way, like also a way to open the floor for digital currency. I'm done.
Thank you very much for being on time. Yeah, that is a map taken from the Brookings Institute, which has a tracker of yeah, it's very interesting because also Cambodia has actually a very advanced experiment on CBDC and is not assigned as a CBDC. So there is still some lagging in that map, but I think it was very interesting because it could give you an idea on the different status of CBDC project around the world. So Stefan, I'm gonna ask you a very brief question. I already know the answer based on your presentation, but I think it's interesting if you can elaborate in a few minutes. So it's true that, you know, Bitcoins has no value per se. However, don't you think that in a digital space where money will not have the three basic functions that we, you know, normally, link to money, but even if Bitcoins is a speculative asset, so it could be used as a store of value, don't you think that then Bitcoins has a function in society?
Yeah, of course, it has a function for certain people, but let's start with the example of El Salvador. If you introduce the Bitcoin as a legal tender, it means that even every domestic transaction becomes a speculative transaction. Why? If you have to pay taxes, you can choose, should I pay taxes in Bitcoins or should I pay taxes in dollars? You will choose depending on your expectations. So for example, if you would expect for some reason that the Bitcoin over the coming days might lose, then you will pay taxes in Bitcoins because you want to get rid of the currency, so to speak, which you expect to decline in value. For me, this is an absolutely crazy system, but as an empirical economist, I would be extremely interested because here in Europe, we don't, and I unfortunately cannot read Spanish, there are practically no reports on the experience over the first weeks in El Salvador. So Maria Antonietta mentioned it. If you have any source which I could read, then I would be very interested. I do think, like Christian, that the issue of CBDCs and Bitcoins are almost completely separate. Casinos, so to speak, are a separate place, and due to the blockchain technology, the Bitcoin casino has immunized itself to a high degree against regulation. It would be very, very difficult for central banks to efficiently reduce speculation in this type of casino because it is a global issue and of course it is a virtual space. In principle, a national government like Chinese can do something because also of the political structure in China, which is very specific, as we all know. But then, as I read recently, Iran is now a place where Bitcoins are mined to a relatively large extent. I mean, 5–6% of the world mining supply is now stemming from Iran. So I'm not sure if this was really an answer to your question, Nicola, but at least, let's say, an attempt.
No. It was a clear answer, and I think it was very interesting. Thank you very much, Stefan. So the time is over. I think there is much we still need to discuss. It's a very, I would say, hot and sexy topic and very timing. So I hope there are going to be further occasion for us to discuss, also because we need to build a bridge between LATAM and Europe, also in this field. I think, multi-CBDC arrangement experiments should be, put in place to improve the financial connectivity between the two regions. So I just leave the floor to Andrea that wanted to do some concluding remarks. But thank you again to Maria Antonietta, Stefan, and Christine for having contributed to this webinar, and thank you all for having participated. And thank you to the colleagues from the book that have organized the webinar. Andrea.
I think Stefan wanted to say something. Okay.
Yeah, I just would like to get the presentation of Christian, and I sent you my presentation to Andrea, and you could then distribute them.
Yeah. No, we could put all that in the web page as well.
Okay.
No, I mean, it's a pity, of course. I mean, I have the feeling that we could continue discussing that. And so I just wanted to mention that this topic was not even originally kind of listed in our activities, but there it goes. I mean, how things move fast. COVID was not there when we planned our network. And I think as Maria Antonietta said, I mean, it's something that's facing us, and it's deeply connected to our concerns. The links between economic and financial system and crisis and democracy. Because I think as Christian also said, I mean, there is this risks of deviation that go from total anarchy to totalitarianism in this control of digital currency. So I really hope that we create space to discuss that further. I think it's deeply connected with also, Maria Antonietta said, privacy, but also democracy and citizenship, as we said. Even if we don't study it, we'll be using that. And even PIX that would now, we should also investigate further what is this currency here in Brazil, for instance, that apparently is something in between or in the direction of CBDC. So I want to thank you all. I mean, from members of the network, as for the audience, I mean, we do have this internet page that I put in the chat, where we'll be uploading also material from the webinar. And if you want to be in touch with us, please, you can send also an email through the webpage. Yeah, I wish to see you hopefully soon in our further activities. Thank you, Nicole, for organizing these, and Stefan, Christian, and Maria Antonietta for the talks. Thank for the two interpreters, Amanda and Pedro, for people who listen to that in Portuguese, and for the staff at BPC, Lia and Luana, who's giving us support here in our webinar. Thank you all very much again. Have a nice afternoon or day here in Latin America. Bye-bye.
Bye-bye.
Thank you. Bye.
Bye.